Money day, guys and girls. Assalamu alaikum. Eid Mubarak to all of my brothers and sisters celebrating this holy month. Guys, this of course, we're back with another Market Mondays, and I want to say first things first. Last week was phenomenal, but inshallah this week can be even better. Now, why am I saying this to you? Because a lot of technical aspects have taken place on the charts, but a lot of fundamental aspects have also taken place in the markets. And therefore, when two things collide, we have a catastrophic form of events that unfold. And last week we saw that. Now, of course, we had the Fed speaking last week combined with the European Central Bank President speaking, President Lagarde. Now, the knock-on effect for what they said last week should ripple on into the markets this week. Meaning, guys, that sometimes when a wave creates the impact, you don't feel it until you get the after effect. This week and the weeks after should be the after effect. Now, we've still got a lot of news taking place this week, but before I even get into any news, I want to make it very clear, guys, that throughout the next 30 days, of course, during Ramadan, I am going to be providing you guys with an unforeseen amount of education. In actual fact, my education course that I sell online, I'll be giving away for free via my YouTube videos. So if you're someone who's wanting to learn how to trade, but you don't know how to trade, someone who's contemplated spending money on purchasing someone's course, guess what? I'm going to be uploading every week a lesson from my personal education that's given me my 5-figure trading strategy formula. So with that being said, of course, if you enjoy this video, please don't hesitate to smash the like button, share it with a friend, or drop a comment below. Let me know what you think about Market Mondays, what you'd like me to introduce into the Market Mondays, but most importantly, enjoy the show, guys, and let's get into this. Okay, so the first thing you should be doing every single week, guys, is you guys should be checking out the economic calendar to seeing what is on the horizon. Throughout this week, we can see on Tuesday is really where the markets kick off with a lot of volatility. We've got the CPI for the dollar, we've got the CPI for the German economy. Now, to give you guys a bit of an insight, the German economy is the largest economy inside of Europe. So if the German economy fails, that is usually a huge indication for where the European economy is heading. Okay, so we're going to have a look out for the CPI for Germany. We've got core CPI and CPI. So we've got the inflation reports tomorrow. Okay, that is what CPI is. CPI is inflation reports. We've got inflation reports tomorrow. Of course, there's been ongoing talks, especially last week, from the Fed trying to curb inflation. So we're going to see where we're currently at with that. And we've got the 10-year note auction taking place. And on Wednesday, we've got GDP for the pound, and we've got the 30-year bond auction for the dollar. And then on Thursday, we have initial jobless claims. Now, this is the most significant news taking place on Thursday. It's to be expected that the markets would probably warm up from Tuesday from Tuesday to Thursday. But of course, again, what we can see, guys, and this is important, this is the main reason why I check the economic calendar, is because of all this high impact news, what it shows me is that the only news that's going to be affecting the market is the US news. Okay, it's predominantly US news taking place throughout the whole of this week, which means now that I'm going to be trading, I'm going to look at US based focus pairs. Why? Because those are the pairs that should move the most. Now, with that being said, I want to head over to the charts, and I'm going to show you guys Bitcoin. Okay, I'm going to show you guys Bitcoin because this is something that I think is doing absolutely incredible right now. Okay, I was fortunate enough yesterday to get into a buy with Bitcoin. We had this pullback here on a 4-hour time frame. Price pulled into this institutional candle. It gave us an opportunity to buy, and we are now sitting tight, riding to the moon. Now, I'll show you where I bought around here. Okay, you can see from yesterday to today, we're up almost 7%, but Bitcoin has gone over 4,700 pips to the upside. Now, a lot of you may be wondering, where is the ceiling? When is Bitcoin going to come down? When is it going to make a correction? Well, what's actually happening is, although Bitcoin is pushing higher and higher, it's also having small pullbacks. I'm not saying these pullbacks are valid. I'm not saying these pullbacks are sufficient, but we are getting pullbacks into areas where we can actually buy from. So we do have to pay attention to the market structure on the smaller time frames to see how Bitcoin is shaping up. Ultimately, guys, this is a short-term buy that I'm in. You know, I'm not looking to hold this trade. My trade is risk-free, but I'm looking to send out some Bitcoin trades throughout this week. We, of course, do need to see a correction. Okay, in order for me to give any type of advice of Bitcoin right now, it's to wait. It's to wait for price to come back down, and until then is the only time that you guys can contemplate buying this unless we get a sufficient pullback. But what's going to be really nice is the sells. When these sells kick in, guys, it's going to be a hell of a move. Now, I also want to show you, I'm going to start off, okay? I'm going to start off with the bonds. Now, the bonds at the moment look to me that they can push to the upside. It looks like we kind of have had a reaction pushing up. This is from late November. We had a lot of bond purchases pushing up, and then the bond purchases started to decrease, and now it looks like we might be on the rise. The bond market isn't showing us a significant, okay, it's not showing us a significant structure that can enable us to say we're bullish or bearish. Why? Because we didn't take out this high and we didn't take out this low. So although we've had, you know, lower high, lower high, lower high, we then, you know, you could say we took out this high. So you could say now that we're bullish, excuse me, but I'm very diligent at the fact that we haven't taken out this previous high anyway. So I can't really see much inside of the bonds. But when I look at the bond yields now, the bond yields, they're giving us a better picture. Okay, reason being is because we can see here with the bond yields, right? We were bullish, and then we became bearish, and then we became bullish again because price closed above this previous lower high. We are currently in the area now of structure. We're in an area where I would expect to see this turn around and push higher. But of course, what price action is showing us right now is, hey, we could also get a push down lower. So I'm staying on the side. Okay, we've got the 30-year bond 30-year bond auctions taking place on Wednesday. Yeah, on Wednesday. So we're probably not going to see a stronger direction for the bond market until Wednesday midweek, but it does look like at the moment we do know this is bullish. This is a whole bullish schematic. We need to see what can happen, because if we want this to pump higher, then that would mean the dollar would come down lower. At the moment, this looks like this could come down lower, and the bonds look like they could come higher. So because of that, this is important to understand that the picture is not as clear as what I want it to be, but because one is showing me that it could come down and the other is showing me that it could go up, it's making the picture a bit more clearer, rather than just analyzing one pair. And rather than just analyzing, you know, the bonds by itself and not the bond yields, I can have a better picture. And then of course, when I go to the DXY hopefully could show me a picture that is in line with the bonds. However, with the DXY, we do know last week it was very bearish, okay? Last week wasn't good when the Fed came out and was speaking. And now, what we see here off the weekly time frame, guys, is we can see that we had a weekly lit block price played into this candle, then reacted, and then it came down. But we could be getting a push up. But of course, if we look at this on the line graph, because that's the most important way to look at charts when we try to ascertain the structure, is we can see that price has been making lower lows, lower highs, but we haven't closed beneath this low. Price has pushed up, closed above this high, so actually this lower high. So we've gone from being bearish to being bullish to now being in an area where we need to see what's going to happen, guys. We need to see if price are going to pull up and push higher. One thing that I haven't shown you guys, which I want to show you guys, is the quarterly candles, okay? The quarterly candles, we can see here, this doesn't really give me much bullish price action optimism, okay? This doesn't really give me that. This gives me more bearish optimism than bullish, okay? So if I have a look at the bonds, the bond yields on a quarterly projection, the quarterly charts show us that actually we could push up higher, but we're currently very stale. We're currently very low. We're currently not really in a land of looking bullish or looking bearish. When I look at the bonds just look disgusting, okay? They've been inside of this range since the beginning of time. This does not give me any confidence whatsoever. So we're in a bit of a sticky situation when it comes to the dollar right now. It's to be very mindful of the fact that the dollar isn't really showing us much movement, and that's the reason why we're seeing other assets such as cryptocurrency and gold, for instance, making all-time highs. Now, when we look at, the quarterly candle here on Bitcoin did push down back in 2023. We came down into an area where we then gave Bitcoin the license to push up and now make a new all-time high. When price does come back down, we need to, the higher Bitcoin goes, the higher we need to raise the expectations of a retest. Meaning, before I would love for Bitcoin to come down to 36,000. If Bitcoin pushes up and continues to make a new all-time high, when it comes back down, making a floor around 55, 58,000 isn't a bad idea. Okay, it's not a bad level of structure for us to think about taking buys. So yeah. Of course, there's two different sides to Bitcoin. There's trading it speculatively, you know, as a CFD, or trading it in terms of buying the physical coins. Right now, I'm talking to you guys just about trading it from a CFD perspective. Okay, for those of you who want to buy Bitcoin, you should be looking to dollar cost average in. Now we're going to have a look at gold. Gold is currently at $21.78 an ounce. Okay, gold is simply doing backflips. There is not a move for us right now with gold. If we look at it from the quarterly chart, the bullish schematic was always there. The signs for us to see this push up and create an all-time high was always there, guys. All we have to do now is be patient and wait for a pullback. Until then, there is nothing for me to talk about. What I do like, however, is I do like USDJPY. Why do I like USDJPY? I like this, guys, because I spoke with you guys last week. I spoke with you guys last week about the Japanese yen basket and about the strength of Japanese yen becoming more stronger. Now, I've also got an article that I read this morning, and the article actually spoke about the Japanese yen deciding now to go into a positive interest rate state. Now, since 2013, these guys have had a negative interest rate. Now, I want to read this part of the article. Where are we? Now, with inflation back above 2%, and wage gains looking healthy, Governor XAUUSD is forecast to raise the short-term rate from minus 0.1% to either next week or in April. As we explain today's story, that would be the first rate hike in Japan since 2007, guys. The first rate hike since 2007. The move would mark a step toward mainstream policy after decades, okay? Decades of experimentation saw the Bank of Japan amass a mountain of bonds and equities, swelling its balance sheets to 127% of annual output. While all the quantitative easing and the negative rates helped weaken the yen and prevent deeper deflation, it was until the supply shocks triggered by COVID-19 and Russia's war in Ukraine that inflation crept above 2%, and it stayed there. Now, I want to explain to you guys quantitative easing. That just means printing money. Whenever you hear them talking about QE, they usually refer to it as or quantitative easing. That just means they are printing money, throwing it into the economy. Not throwing it in the air, but they're printing money, pushing it back into the economy, okay? Now, this is really interesting because I told you guys last week, right? I told you guys, if you go back to the previous Market Mondays video, I told you guys that when it comes to the Japanese yen, there was liquidity to the upside. And because of that liquidity around here, remember last week on the 4th of March, this was last week's Market Monday, I told you guys I wanted to see this reaction, and we saw the reaction, and price pushed up to grab the liquidity. Now look, this has been a long time coming, okay? Since 2007, Japan has not had a rate hike since 2007. The yen is about to grow incredibly strong. And when it does, guys, we are going to see significant moves in the market. We've already seen moves with EURJPY, USDJPY, but of course, right now, if I remove this, and if I also remove this fib, we want to look past what's happened last week because it's a new week now. We're currently sitting inside of a candle where we can expect price. We can expect price to mingle around, you know, maybe consolidate, but we need to see what happens when price pushes above this, okay? I'm very optimistic, I'm very bullish on the yen, and because I'm bullish on the yen, this means we're gonna have a lot of opportunities to be presented to us. Now look, the higher time frames don't really show us a nice picture. There's not enough data, if I'm honest with you, but we can at least see price push up to make a lower high, at least. That lower high area needs to come around the 6,900 mark. Now, if I go back into USDJPY, USDJPY is at a significant level of structure right now. Right now, where it's at the moment, it's lingering around a significant level of structure. When I look at the quarterly charts show me that prices could come down, okay? When I look at the monthly charts also show me that price could come down. This is really important, guys. When USDJPY reached a 34-year high, it reacted from it once, twice, and now we haven't quite reached the 34-year high. However, the yen is growing incredibly strong. It's growing momentum. Since 2007 is the last time that the yen had an interest rate hike. So because of that, right now I could favor the yen pushing down lower. But we can't sell from here, ladies and gentlemen. We can't sell from here. What I would be looking for, okay, I'm going to remove these alerts. What I would be looking for is a retest, okay? If we can catch a retest, now we haven't made a new low, so we can't actually take the fib out, okay? Well, we've made lows here, but I'm kind of really referring to this daily low here. But for the purpose of this video, let's just go from here to here, just to give you guys some type of an idea. We can't really look at selling this until we reach back up towards this eye candle, towards this daily green candle, which is actually ironically inside the 70 to 79% G-spot sweet spot. So what we can look at doing is we can look at seeing a move up from here, 1 out of this candle, 2 from the significant level of structure. This is a possibility that can happen, but of course it might be safer for us to wait for the sell as opposed to trying to anticipate in a buy. So I'll keep you guys informed and up to date inside the Discord with that. This is a trade that I took last week. It was being really stubborn, it didn't want to move. Now, however, you can see here, guys, from last week, you know, when we had the Fed speaking, the dollar was just weak, and unfortunately price was just continuing to push and push and push and push. Now, however, it looks like we could get a move. So if you guys watch this video now, we're in this trade currently at the moment. We've got into this trade literally, you know, we're probably less than a pip in drawdown, okay? But we've got into this trade within the past 30 minutes. I'm going to wait to see how this trade plays out, and the next time I do a market outlook or I do an end of week review, you guys will be able to see how this trade played out. What else can I show you guys? So with the pound actually touched an area, took out a lot of liquidity. It's sitting inside a daily candle. Now it's reacted, but I'm kind of staying away from the pound right now. I'll be honest with you guys. I ain't gonna cap. Staying away from Euro AUD, but EURJPY, what's this? Euro USD. Euro USD could also push down lower. I'm gonna stay away from that. EURJPY. Now look, guys, we sent this trade out last week. It looks like it's continued from last week. What I'm looking to see is for price to come down and reach my eye level so that we can get a retest. If we can get a retest down from here, if price can touch the eye level, I'm confident it could push up. It could give us a potential entry for us to take a short on this pair. Now, I know we're approaching 16 minutes in the video, so I do want to say if you guys have made it so far into this video, please guys, smash the like button, drop a comment below. It helps improve the algorithms and it helps other people come across these videos too. The last is the United States Mexican peso, USD, peso. Now the peso for me right now is something that is sitting inside of a daily candle. So when I was selling, this was the promised land. Okay, look, this is exactly where I wanted it to reach. It's reached down here. I want it to react, because if it reacts, guys, then we can catch a re-entry to ride this baby lower. Sometimes, guys, the Monday is the best day for you to just plan your moves, see how the markets work out, and of course wait for your entry. If you want to be a sniper, that doesn't mean you have to shoot every time you see something. It means you have to wait for price to be inside your target. So we want to catch a re-entry on this, and in order to do that, I want price to push up so it can play into areas. Bless you me. I want price to push back up, fill some of this imbalance, and when it does that, of course, we can catch some potential re-entries. But this is all going to be depending on the news that takes place throughout this week. Like I told you guys, we've got GDP, we've got inflation, core inflation results tomorrow. Inflation's going to be a big one, and of course we're going to see some movements in the dollar. So that's it, and I'll show you guys AUDJPY. AUDJPY is really bearish right now. Why? Because of the yen, guys. The yen is on the rise. I don't want you guys to fall asleep on the yen. So guys, with that being said, this is the end of the Market Mondays. I'll try to bring you guys a lot more information each Market Monday. Of course, what I told you guys about the Bank of Japan is really important. Okay, it's really important. Remember, if there's anything you take from today's video, the Bank of Japan either this week, next week, or in April may raise their interest rates for the first time since 2007. This will be really significant, and this will impact the Japanese yen. So because of that, let's look at some yen-based pairs and try to understand where we could get in, and of course where we can get out. So I'm going to be providing you guys with all of this information inside of my Telegram. If you're not already inside there, it's a subscription fee, but I also have a free Telegram where you guys can get a tiny insight to what my subscription is about. But with that being said, Once you're inside the Telegram, I'm providing you guys with education. I've told you guys on YouTube, I'm gonna give you guys my course online. Well, these guys are getting it first inside my Telegram community, and they're getting a lot more. They're getting access to live streams, they're getting access to economic breakdowns. I'm teaching you guys how to understand trading from a technical perspective as well as from an economical perspective too. So this is really important, guys. If you found this video valuable, like I said, drop a like, comment, share, subscribe. You know the vibes, it's lit side. And most importantly, click the link below so you guys can get access to my Telegram. You can hit me up on my socials, and I hope you guys have a wonderful week. You smash the charts and you trade safe. Always remember, every day is money day. Peace.